Sabharwal as well and ask him what he's making of the market. Sandip, you're not surprised by the move yesterday, the fact that we made it back to 25,000, and this morning, once again, it looks like it's going to be a dash to that 25,200 print.
So I think it's a climb of wall of worry, which always happens in the markets as most people get very negative on the markets. And the problem with most forecasters is that they look at the past to forecast the future, whereas the future might be very different from what has happened in the immediate 6 months. So the thesis, like I've reiterated several times, always was that with reducing global tensions, lower inflation, lower interest rates, increased government spending, and finally a pickup in consumption because of all of this, the Indian markets will do reasonably well this year. And I think that thesis is playing out now. Uh, Also, we have reports that mutual funds cash position also has reached like multi-year highs. Like mutual fund equity funds are now holding more than nearly 7-8% in cash, which is a huge amount given the size of that corpus. And they have not deployed during the entire correction. So I think at some stage that provides cushion to the markets also.
Okay. So Sandeep, what's next now? We are not, I mean, there is no longer a wall of worry. There is only hope, hope, and hope, and hope. Whatever could go wrong has gone wrong, and everything has got fixed, from tariff to inflation to flows to economy to now what is happening in terms of the macro. The only worry now, Sandeep, is valuations.
Yeah, so valuations are not cheap, especially in wherever the sectors get fancied. So if you look at like most of the defense stocks, I think they have already reached levels where they started to fall from. Like many of them have not, but still at those valuations they were at 100 times. So I think now the bounce back has happened. So although the story has become stronger, but people need to wait for the right kind of levels to buy. I think where the value still exists and where we could still see performance coming in is many of the infrastructure construction companies, some capital good companies, autos, uh, some NBFCs, the banks. I think will continue to do well. So I think there are opportunities even within the larger cap universe. I think Reliance will continue to outperform. So, so I think there will be opportunities in the market because, and many of the other consumer durable names also, some stocks are correcting because some summer demand has been less because of rains and all. So if stocks remains, some stocks remain subdued because of that on the durable side, that could give an opportunity to play them for the upcoming festival season, which I think will be very strong this year.
Aditya Agrawal also joined. What to do, what not to do in this market? I mean, the sectoral churn is clearly on, which is that we've seen first banks come back, then we've seen defense, then we've seen metal. So it's like this passing the parcel which is on. So before the music stops, Sandeep, where should we pass the next parcel now?
You are saying before the music stops. I am saying party abhi shuru hui hai.
अरे एक
So
दिन तो
I
बंद
don't
होगा
know.
ना. I'm saying so party में next कहाँ जाना चाहिए?
So next, like I said, I think the sectors which still offer opportunities, I already told on, I already spelled out when you asked the last question. So I would think that what people should not do is to chase performance too much. So just because defense stocks have gone up 50%, everyone is shouting that some stock has reached a new high, etc. Don't chase them at that point of time. Wait for better opportunities to come in because obviously, like you also said, markets will not go up in a straight line. There will be correction. There will be some global event. There will be some news flow because of which some correction could happen. Wait for those opportunities and then buy. What I will not recommend is that holding excessive amount of cash because I think we had a substantial correction both in terms of value and time starting last September, where many stocks lost like many stocks become 40-50% of their value also from the top. So I think now, if some people are expecting that markets will again have that kind of correction, that is not going to happen in my view.
You still like Reliance, you still like L&T, you still like Bajaj, you still like KEC?
Yeah, all these stocks I think should do well. I would think that because for many of them, the participation has just started. For many of them, the move is not complete in my view. So I think many of these stocks will still do very well. And some of these construction infrastructure companies not only have tailwind in terms of order flows, execution, etc., but also they are key beneficiaries of the rate cut cycle because they tend to have leverage. And as the rate cut passes through, so we'll see benefits below the operating profit coming for these companies in terms of interest cost reductions also.
One stock which is revisiting, but we are not expensive. Markets will peak out when they move from fair value or reasonable value to expensive value. So and with earnings of about 8 to 10%, can one say that 8 to 10% earnings driven return and maybe 2 to 3% expansion, P expansion return? So next 1 year, large cap stocks from here should give between 10 to 12%. And if Sandip Sabharwal is managing money, it could be 15 to 20%.
Person, I think is a fair assumption. So because see, the valuations always get a fillip when rates go down. So interest rates going down typically is positive for valuations in the market. And the recent inflation data also indicates that the pace of rate cuts could be more rapid than what was initially expected. And to that extent, it is a support to the markets. Now, last year earnings significantly underperformed what was the expectation beginning of this year. Now, all macro factors do indicate that in the current financial year, on a broad overall market basis, earnings growth should be around 12-13%, given that base is low for many of the companies, and then there will be a growth revival. So I think that's key, like you rightly said. So I think if earnings growth pan out this way, then 8 to 10% further rally in the Nifty and Sensex is a likely scenario.
Okay. TLF yesterday.
Auto will be in focus as the company has announced that they will be investing 1,200 crores in their Netherlands subsidiaries. And Sandeep, I wanted to have your take on this one because 1,200 crores is what the company has announced, but they have been putting money into their businesses. The last number that we have is over 15,000 crores of cash surplus in their balance sheet. 1,600 crores is what they invested in Q3. It's another 1,200 crores. Given the fact that the stock has corrected so much and the earnings so far haven't been disappointing from the likes of TVS, Hero MotoCorp, do you believe it's time to maybe look out for Bajaj Auto, and how do you see all these news flows shaping up for the company?
Yeah, so I would agree that Bajaj Auto is deeply oversold in a sense. Like I think peak was around 12,000 levels. Now it's at 8,000, and we have actually, as a disclosure, been accumulating this stock in this fall. And I would think that most of the negatives are built in. There's a possibility of two-wheeler sales revival in the domestic markets this year, and the export markets could continue to do well for them. So, and they are also becoming a stronger player in the two-wheeler EV market. So I would think that most of the negatives are in the price. People are waiting for some sort of triggers in terms of volume growth, revival, etc., for the stock to perform. But typically, I think once that kind of information starts coming in, the stocks have already moved up. So among the large cap space, this stock I think is pretty well placed.
Okay. Sandeep, let's do this good old comparison. Zomato versus Swiggy, Swiggy versus Zomato. Swiggy is trading at a deep discount versus Zomato. Can Swiggy catch up with Zomato, or Zomato will come down and align somewhere with Swiggy?
It's a race to the bottom for these companies. Like the quick commerce space is becoming so competitive. These people are investing so much in that space. that it's tough to understand their strategy. Like Zomato obviously benefits because of its index participation. So as the index moves up, index funds participate and index flows coming to them, and that supports the stock somewhat. Swiggy results were extremely disappointing. So I think their revival will depend on their capital allocation decisions becoming proper. They have such a good hold, both of these companies, and could have entered a strong cash generation cycle if they had focused more on the food delivery, etc. business, which is generating cash. They have chosen to put more capital into the hyper competitive, uh, quick delivery kind of market. So I don't know where it will go, but I think it will become worse before it becomes better.
All right, but others, day by day, it's just the negative news that have trickled in. But do you believe that in the times ahead, there could be any trigger that can actually save IndusInd Bank from falling? Because there has been a one-sided fall that we have seen on this counter, indeed.
So I think the news flow is very, very strange. Like banks are regulated so much. There are so many audits. There are so many audit committees. There are what was the managements and auditors doing in this bank? It's very tough to understand how this can happen. And it raises a question mark on what all can be hid by managements if they want to hide things. So I think it's a bigger wake up call also. So I think it's very tough to take a call on this stock at all. Like why should anyone just buy into it or I don't know. It's very, very strange all the disclosures which are coming.
Yes, a lot of grey out there, but hopefully it should all be put to rest. Sandeep, always good having you on the show. Good to have you on board with us as always. Absolutely flat right now. That's what the pre-open rates are indicating. Maybe we'll pick it up from there. We'll give these rates a little bit of a skip and give them some time to settle down. Just want to check in on Bajaj Auto. They're looking at infusing about 1,200 crore rupees into their Netherlands arm. Biocon, which has received an ANDA approval for a blood clot treatment drug by the US FDA.
If you like this video, then like, share and subscribe to ET Now.